Let's go to our guest today. You guys smash the like out there. We've been having a great show. Let's keep it moving.
Rocky, you've always given us a lot of compliments on the show. Can you upgrade our show today?
I'm sorry. What show am I on right now? I've just been on so many shows this morning, and
it's named Bloomberg.
it is great to see you guys. I see the blue thing. I did not get the memo about the Sirius Blue today. I was kind of hoping also it'd be Friday the 13th, but it's Friday the 14th.
Oh, I know.
Yeah, it would have been a lot of fun. Good to see you guys. Good to see you guys.
Good to see you, Rocky. Well, we've had some pretty good analysts on the show, and
that's a four-letter word.
Yeah, we've had you on quite frequently, and I can remember during some of the tougher times earlier in the year, maybe in February, you were like, hey, it is what it is. You got to get your shopping list out, and you got to look, for stocks that you want to own. You want to own them on a long-term decline. Of course, your short-term trading is different from your longer-term trading here, but help us put this rally into perspective, or can you put this rally into perspective?
I love being on the show, and I love the audience, and I love the chatter and what you guys say. We have skin in the game. We're not talking about ideas and getting on Zoom and talking about things that we're not feeling and going through. So that's one of the things I love about being here and talking to this group. As far as making sense of all this, if I remember that the market's always thinking 6 months ahead, 1 year ahead, I know it's easy to grab all the Armageddon, apocalyptic type narratives. I get it. They're out there. But at the end of the day, when I look at price, it's just not being priced in. We've had an uptrend in the NASDAQ led by XLK, XLC, XLY since the end of April. So what I think and what I feel are irrelevant. It's just what I see. And I think that's the hardest part of trading. Turning all the 100%. Other noise off and saying, it's in an uptrend. And yes, it might be stupid, but I don't get penalized. My brokerage statement isn't 15% because why are you in a stupid uptrend? I get paid the same. So we all do. So the way that I like to look at it is if we're in the pause to pivot window of one more hike at the end of this month, maybe, but it looks like less and less so, one more hike before the end of the year. This central bank's just about done, and it makes sense why there's risk appetite mostly in tech. Healthcare is still a laggard. Financials are trying to come back, and I'm scared to death about regional banks and commercial real estate. That's one thing that I'm scared about in the back of my mind. But other than that, buy the stinking dip.
That's the truth. And I think that one time that I can say that a lot of people have a tendency of when they see prices just going through the roof, they try to put logic to the market. And that's when we start getting, really frustrated, right? Because the truth is that a lot of times what we do is we hear, oh, stock market, well, read this book, right? This will give you the answer, right? And the truth is that this is not in any books, right? And if anything, one thing that I think is important is learning how to just kind of follow the trend, right? And maybe using different kind of moving averages, things like that to tell you, are we still in this trend? Because it just continues going higher. And anytime that we get this little downturn, you see some of the bears come out of the caves, but quickly, they just get destroyed and run over.
I love that book that you held up there, Mitch. I don't know if that was New Market Wizards or Market Wizards. Yeah. One of the first books I read. Yeah, it's just still the best. This is what I tell everyone at Market Wizards. How-to book? No way. 30 people in that book, 30 different ways, floor traders, systems traders, long-term, short-term. They all emphasize one thing, risk management. And that's it.
That's
right.
It.
So if I'm going to get long, I don't want to get long at the top of a great Momo day. And I saw someone mention in the chats as it was rolling by, everything does have a tendency to either pull back, retrace, or revert to the mean. Be patient, wait for that pitch, and then we'll get to work. But yeah, that's the one thing I love about that book. They all emphasize risk management.
Love it. We're going through it right now with a book club that I do here for Benzinga. So love the shout out there. Let's go to crypto, as we've been seeing crypto really boom lately. And we saw that XRP come out and a lot of stocks starting to lift off with this. Do you think that Bitcoin could maybe just getting started here?
Yeah, I did wear my diamond hand shirt. I will be straight up. I haven't looked at it because whenever
It's the
everything starts
best.
turning bearish on it, I want to shut it out because part of diamond hands is also deaf ears, right? I don't want
I
to
I
like it.
like
hear,
it.
I had a theory, I had a hypothesis back in 2016. I've also got a really good cost basis. And then I just turn it off. But I will say, when you look at sort of the metrics, and again, I'm no expert. When I look at the metrics of the ledger, though, it's getting more active. I am noticing when I'm following people that know far more about crypto than I do, things are getting more active. So I'm just going to hodl. That's all I got to say about that. It's going to go up. It's going to go down. I'm no more sad when it's testing lows than I am excited that it's testing highs. I just try
Non-emotional.
to remind all my friends and family that always ask me about Bitcoin when it's moving higher. If you love it when it's moving higher, buy it when it's on sale, for crying out loud, if you really believe in the narrative, which I do.
Do you go for any of the stock plays? I just wonder, any of the miners, are you
Your
interested in
Maras,
those?
your coins, things like that.
Yeah.
I'll trade them, but my usual thought is unless there's real liquidity, at least say 1,000 open interest for the strike that I want
Hmm.
in that stock. I don't play the stocks. Usually I'll play the options. So unless there's liquidity, sometimes that'll keep me away. But Mara coin, they're quite liquid, but I'll usually trade them 2 to 4 weeks, 4 to 6 weeks, that kind of window.
Okay.
So, Raggy, when you're in this kind of environment where basically everything is going up all the time, like what do you look for? I mean, a lot of Dennis and I over the years, trying to call turns in the market. Well, you could try and call a turn, but if it's not a turn, then you better double up and go the other way. When things get to this area, because and I've mentioned this several times over the last week, there's no daily resistance in here. There really isn't. We came down hard in April of 2022. Do you wait for some kind of technical formation? Do you wait to some kind of macro event like China invading Taiwan or war in Ukraine or a banking crisis? What kind of things do you look for a potential turn?
Having watched you guys for a long time, and I think Dennis does this really well. You do this really well. Mitch, you're great at playing referee. But you both are looking at narratives in the market, right? I know Dennis does
Mhm.
this a lot. He's looking at different narratives, different stories, saying, hey, this could influence psychology. And then I think like every great trader, we know every great trade has an underlying story that finally dovetail with price action. Eventually the story and the price had the same direction. And that's something we're lacking right now. I look at the transition from Q2 to Q3. I haven't seen you all since then. We look at, was there sector rotation? Not at all. Tech just got stronger. Maybe financials got a little bit of a boost, but we didn't see a lot of profit taking out of XLK, XLC, XLY. We have that wonky rebalancing today. So we'll find out ultimately, where the extra percentages are going to come out of those magnificent seven and into the other names. But ultimately, I'm just sticking with tech. I'm trying to get a little bit more bullish with financials. Healthcare is still a nightmare, and that's going to keep the Dow and the S&P lagging behind the Nas. And that's why most of my emphasis has been on tech. And this rebalancing thing with the Nas, I think, is just an opportunity to take advantage of some shallow dips. Although we have earnings too, right? We're going
Yeah,
right
I was
into the
just going
last
to
week
go
of
into
earnings
that.
season.
Everyone, Q1's going to be bad, and it wasn't bad. And now coming into Q2, whether or not companies are lowering the bar or not, any sectors or anything you're looking for? I mean, looks like the financials are off to a good start after a banking crisis. Who would have thunk that? But where else? I mean, obviously your mega cap tech. You think there's any, one report or two reports, besides the mega cap tech, that you think you're going to be keying on next couple of weeks?
Two things I wanted to mention because I wasn't bullish in financials and XLF until the last day of Q2. So what was it, the 30th of June?
Mm-hmm.
We finally broke above the 200. And kind of going back to the book Mitch was holding up, you look at some of the technicals that the legends, the traders who were trading in the 70s and 80s. I only started in the early 90s, but some basic things. They talked about 200 simple and exponential moving averages. And so some of that old school stuff still works. If you look at the 30th, XLF finally busted above that 200 and it's been, pretty much looking higher ever since. Some of those basic things work. So back to XLF, really bullish there. Not bullish on KRE. And if XLF and tech remain strong, that puts the S&P in play, but it's going to, the lagging in healthcare is going to keep the Dow from joining the party. And if you take a look at who's been lagging, it's mostly been the Dow and the Russell. And if we think back to high concentration weighting, the Dow's number one sector is financials, and the Russell 2000's number one sector are the regional banks. So again, once again, financials. So it's really more about what I've not been trading, kind of a do not watch list or do not trade list, and waiting to see if healthcare ever starts to join the party. But right now it still looks terrible. So what am I looking at? Pretty much the same things I was looking at for the first half of the year, tech, and then now financials have made their way to the list.
Any thoughts on basic materials, and maybe we see inflation tick up a little bit as the dollar keeps coming down here?
Basic materials, when I take a look at, I look at 4 moving averages, 8, 13, 21, 34, exponential, they're Fibonacci based. I mean, pick whatever you'd like, right? I think if we pick a number of moving averages and when they align in a certain way, for me, that's just an easy, very mechanical way to say, this is a trend and this is not a trend. And basic materials turned into a trend. Interestingly enough, great. I'm so glad you brought it up, Mitch. They turned into an uptrend at the end of Q2. And why is that such a big deal? Because at the end of the first half of the year, the end of the second quarter, we started to see the net flows tick up. We started to see the uptrend kick in. And that timing, before the end of Q2, going into Q3, that tells me money is willing to sit there. Money is willing to commit to some of that long side. And so financials and basic materials, XLB, benefited from that timing.
We've been on the line with Raghee Horner, Managing Director of Futures at Simpler Trading. Always a great, fun, cheery, happy, nice, smart guest. Thank you, Raghee. We'll be talking to you, I'm sure, in August.
Thank you so much, guys. Great to see y'all.
Always good. All right, gonna have to find out what that 10X book is in the back. I like that. We always want a 10X, baby. Let's get after it.